Hey everybody, happy Friday to you. Hope everybody's having a wonderful Christmas season. Ukrainian friends continuing to fight hard. Unbelievable. They continue to agree to all U.S. demands. Russian side does not, though. We're going to have to see. I don't think I'll do too much on geopolitics today, but still in the vein of keeping calm amidst all this geopolitical turbulence. One of the questions I've been asked a lot recently is if this power curve could be breaking down. All right. As you see, it's just a little bit below. All right. Of course, it's log scale, so the curve itself is going to be 125K by the end of the year. All right. This is the black play button. You can't really see the button, but you can see it on the tooltip. Price 92K, volatile as ever. But people want to know if it, if all of a sudden we're going into a bear and this continues on a, we get out of this sort of secular bull. It's not as high as people thought it would be, including myself. This cycle. Could we be changing the overall nature of the power curve? I've shown a few different charts on this, but let me try to give you guys another flavor of how this thing develops. All right, so again, right now, we're holding at this sort of 30th percentile on the quantile regression. Right? There's a few different ways you can do this, but on the quantile, where 30th percentile is 88,000. All right, so if you take comfort, you don't need to trust it, but if you take comfort in what the power curve represents, network growth. Good meeting, Bitcoin Polska. Thank you for your greetings. Warm greetings back, as always. Appreciate it. Oscar. So just saying, if we take comfort in this curve, the short-term volatility usually, dampens out. But people want to be sort of assured that the curve is still surviving. All right. So I'm going to try to show that a little bit more. How strong is this 96% R squared? What does it really mean? How has the curve evolved? So I've shown this before. We're coming back to it. This is the evolution of the power regression. All right. So right now we're here. Okay. But remember, when Bitcoin was growing very fast, early days, it was kind of finding its pattern. Tro low, low, low. Inspired me to do a lot of this research. Had some pretty famous Excel charts on Bitcoin Talk about here, claiming that Bitcoin was on a logarithmic trend, which is a little bit different than a power trend. We weren't quite sure, right? But the point of showing you this dotted line is, of course, it was even growing faster than what the all-time trend has settled into. Okay, so this all-time trend is the solid black line. Evolution is here. Fine. All right. Well, let's even take this off, just a few more things. So the evolution is always going to match the all-time at today's date. Okay, they're going to be completely equal. I have a weird gap in my data. Too many charts, guys, as always. Let me fix that really quick. It's going from August to December. That's why you got that weird kink. It's not a problem. We can fix it on the fly. One second. But we'll get to the proof. I just need to fix this. Understand why it went from August to December. One second. I think it's just as simple as that. This was a few months ago when I did this. There we go. I do need to pull that out. Okay, 1 second. Just 1 second. Get rid of that little kink. And that should be good. All right, sorry about that. On the fly corrections for you. Yeah. Good point from Oscar here. You know, by definition, the spacing of these lines will give you 10% of the time. So when they're closer together, it's pretty common that it stands around this price. When they're farther apart, i.e. between, say, 9 and 10 or 8 and 9, it's more rare air. All right. So, going to go back to this chart, put it on log scale. Let's try to look at this again. All right. No more kink in the data. This is just a monthly frequency, but it's going to be pretty much the same for daily, but it's smooths things out a little bit. So one thing that looks good about this, all right, it is true that the curve comes down over time, okay, because it was higher here, it was higher here, it's come down. But since about 2016, which I've mentioned a lot, it's been pretty close, all right? You see that during the booms in 2017, 2021, it pulls it back up, right? But, you know, it's not like these are major gaps, not like stock to flow errors. Okay, but now let's look at this one, which I think is really just hopefully going to hit the nail on the head for you. This is the evolution of today's projection, what the trend at the time would project for the price today. All right, and in the early years, it's pretty crazy. Okay, so because the trend is actually way up here, you know, we're at these very fast growing curves where we'd project, you know, in August 2012, Power Trend would have projected a $960,000 price for today. Not great. $1.6 million here in August 2014. But once you see that you get to basically, like I said, end of 2016, all of a sudden this thing is flat. The projection works pretty well. So this is another indicator that the trend is pretty strong. It's stable. And then we can ask, okay, so again, just like the evolution, this is going to go out when you get to actual today's price, it's going to meet the precise trend. All right, so 122K, 123K is our trend. So we have many projections that were higher, all right, a lot higher than this in the early days, right, when there wasn't that much data, No one even understood that Bitcoin could have been a power trend. Even Trolololo thought it was a logarithmic trend. We know that it's overshot our current stabilized level for a long time, but has it ever been under, worse than today's power trend of 122K? Okay. And the answer is yes. And it's right. We'll go down. You see it's coming down, down, down. It's right there. So in May 2017, that power trend, which is number one, right? Number one on the chart, lined up very close to the all-time trend, by the way. It happened to be about the stabilized level. You see the all-time trend now, it would be 2142. But at the time, it was 20, 2,000. $2,000. All right. The price was 2,300. But what would the trend at the time project for today in 2025, December? And the answer is 115,000. So if we go back to what today's actual power trend, I know we're under trend today, but that's fine. That's okay. The level is 122. 123K is the trend. So what we can see is there's a few months here in mid 2017, which is interesting, right? So let's go to May again, which I think is the worst, right? What was happening in May 2017? Well, we were starting a boom, right, coming off of $1,000 at the start of the year, but we were concluding what they called the crypto winter at the time. We were finishing it up. As you can see, price was way low for a long time. So that just deep, deep bear, which lasted 3 years, basically. 2 full years, whatever. Really 3 years. You say from the top in 2013, we didn't sort of for sure get out of it until late 2016. But by May 2017, the trend line had come way down. The projected price for today had come way down than these sort of eye-watering levels of, $1 million of Bitcoin will be projected for today, based on even 1 year after that first boom or the major boom. And then here, it wasn't even that high. It was 873,000 when the price peaked in November, December 2013. Peaked in November. So what's the point? The point is we have not even broken the lowest level of the power trend, even with all of this, if you want to call it bearishness in a secular bull. We absolutely could. Again, I'm the king of disclaimers. I'm not saying that we're not going to go lower than this level. All right, so May 2017. But basically, when the power trend now, whatever the trend is, gets below 115,000, then we will say, okay, well, it's setting in new lows. We're just going to have to watch. I still am not going to believe at the time, if that happens, it's never going to go back up. But that's what happens, right? If price is under the trend, it'll just pull the line down. If it's above, it'll pull it back up. This is the beautiful thing about this, the way of looking at this. Now, here's another helpful one, or interesting, is what's the evolution of the end of this decade? Or really the start of the next one, but December 31st, 2030. And the lowest, again, we've ever painted is 520K. So 520K is the lowest ever projected by the Bitcoin power trend. There may be a little bit lower on, I don't know, May 15th. I'm just doing this at month end. It's not going to matter much at all. What do we think, based on all of the data since then, end of 2030 price will be? 555. All right. 555. But that's come down, right? So during the good days, we were already, look at that now, number 3. We were back above 700,000, even 800,000 here. But based on what we've been doing, how we've been stabilizing, clearly we're going to have more interest from ETFs. I'll show you that in a second. I think 550 to 600,000 is a reasonable target for the end of the decade. The lowest we've ever painted on this indicator is 520. And that was a long time ago with a lot less data. Yeah. Precisely the point, Oscar. It really is. It's an amazing illustration of what Bitcoin has become, which is a pretty stable network effect. And you can see it in this projection. I thought I would be talking to you guys about this level. I know I've said it a bunch recently. We're not there. We're not there. We're not there. Not even there. Not even there. But even if this, price market structure, however you want to call it, breaks down a little bit more, we're not at the worst. The worst would be if the trend line itself gets down to 115K. So we have room. Again, it's not saying that this has to be the absolute bottom for all time. But this should show you where things have been and where they could go. Yeah, maybe. Let's look at some institutional. Because let's hold off on gold. Where's my ETFs? Okay, here's some. This is just the main ETFs. Of course, there's a lot more going on, but they go up, they go down in the last 2 years. There's a lot more happening in all of Bitcoin treasuries, as we know, MicroStrategy as well. But if you smooth all this out, we're in a deleveraging period. But lessening that deleveraging, right? 2.3 billion down in flows over the last 30 days. And when this number has gone positive, it has indeed been kind of a push for price. All right. So unlike what I was talking about yesterday with the money supply not really being a huge factor, in my opinion, something like this, like when it's directly related to the markets in the short term, might be a better way to look at it, right? Let's just take everything off so you can see precisely what I'm saying, except for IBIT, because it's huge. these guys have pushed the price around a lot. Only but here did the price stay elevated, relatively speaking. But I would say this is even a better indicator on the short term than money supply. Let's look at the holdings of these major ETFs. Again, there's a lot of noise with the smaller ones. They were at 1.3 million at the end of the summer. Now under 1.3 million. But I don't think this is going that much lower. And when you tack on what Saylor's doing, it gets interesting. Got another 700,000 right there. So I'm not saying that ETFs are going to dominate everything that the price does, but it's definitely going to be something we should keep our eye on more if you want to look at the shorter term, as opposed to even the money supply. So I'll come back to this more. I haven't shown this since September, as I just realized, but this should give us a lot of comfort. It's just this straight line from 2016. Slightly down, slightly. All right, but actually from about this time, it's slightly up. This is the worst dip. You can't see it from my tooltip, but right there. And who's to say we're never going to have a boom again, or everybody's making that call, but me. So the point is, it's not like this stuff is coming out of left field. It's not like any of these numbers are a surprise to people that really have been paying attention. These are long-term indicators of supply and demand for Bitcoin, which is illustrated by price. But this is a good point, by the way. Still, over the long term, we might not be ever thinking about this level again, right? These 10% drops, 10 percentile events. Yeah, we might not be as crazy as we were in these last cycles, but precisely the point that Oscar's making here is, if we don't have the extreme ups, why would we have the extreme downs? And I think that's very true. Although I have to admit, these guys can move price a lot in the short term. Saylor is a de facto bull. These guys are more reactionary. Right? Okay. This remains the most interesting chart for me. All right, let's look exactly what's happening in the last couple days, weeks, I guess. We've maybe bottomed out. Maybe gold bugs aren't going to get any cheaper than this. Can't say for sure. But, 21 ounces of gold per Bitcoin might be the best you're ever going to get if you're a gold bug looking at this. Right? Statistically, you got a much better deal back here. 10 ounces of gold. Actually, in nominal terms, you got a much better deal. Statistically, it's never been cheaper. Literally scraping the bottom of our quantile. So I think this is fascinating, right? I mean, they're both hard money assets. Everybody and their grandma knows what Bitcoin is now. Everybody knows that they got burned by Peter Schiff on Bitcoin. They're going to go into gold now at $4,200 an ounce. Are they going to go full metal jacket? What do you guys think? I don't think so. All right, so we have our flows. Let's look at volatility again. All right, ETF started precisely here. Here, actually. Right there. They did bring the volatility up to about 2.8%. Now we're down 2.2%. Redo that. You could. You could. Gold is expensive, though. Did I reset my gold in dollars? Hold on. Check it for you. Just 1 second. Apologies. I'm trying to fix everything up on the back end for eventual better retail stuff for you guys. Finally get some charts that people can enjoy besides watching the videos. Did I not just change that? 1 second, 1 second, 1 second. There it is. And I'm sympathetic to it because I really don't have a problem with gold as a general hedge against fiat madness. I'm sympathetic to the idea, but you see where we are. It's precisely because of this that the Bitcoin gold is scraping the bottom, because the actual gold is scraping the top. And unlike my multiple one, which is a little bit different percentiles, this one's interesting because we're kind of in uncharted territory, right? So like before this boom, this line would have been like basically kissing this line, right? This top in 2011. But now this thing just gets pulled up. So it's anybody's guess where it stops. But gold miners, they are susceptible to the laws of supply and demand, unlike Bitcoin with the difficulty adjustment. Doesn't look that exciting, right? But I do agree it's still a good hedge. This is to this comment. I'm buying both. Remember, mining is a minnow. All right, so the gold market, they're pulling in, $390 billion a year at the moment. We're pulling in 17 billion for miners. And that's another thing that's, I think, a very interesting sort of indicator, which I talked about this before, right? But like central banks, they're really, okay, they're buying. But if you look over the long trend since 2008, it's like 1.5% per year, and compare that to this, right? From basically GBTC having 500,000 Bitcoin, half a million Bitcoin by the time the ETF game started, to now the whole ETF industry at 1,200,000. That's a lot faster growth rate. Curious what you guys think of this. If this inverts, right? If we start going positive, usually a good sign. I need to get the old, I do need to get a couple trading indicators for Bitcoin, because I saw this guy I follow on TradingView, which I'm not a big head and shoulders Elliott wave guy with all this stuff, but Here it is. So this would definitely be great for buyers. All right. Maybe you guys saw this. The old MACD on a monthly basis, I guess this is. All right, when this thing goes red, it's usually rolled over on a monthly basis, and it's going red. So I'm sympathetic to something that's longer term like this. But again, this is the 4-year cycle. I mean, argument, that's what this is. You know, $45,000 Bitcoin where his arrow is, which is June, July of next year, which would be max pain. Let's look at our percentiles. June, July. Yeah, I mean that's a new, that would be painting a new low. Like power curve, which is usually pretty good, would not expect that. Would expect 70K. You know, that there's some caution here though also, because this is still a and this is a log linear type analysis, still kind of exponential stuff. You know, if we have not had like incredible highs based on the power curve here, it's not necessarily a given that we'll go to the one. So that's a 50-month moving average. I think it's a 50-month moving average. Yeah, 100-month, 50-month. Because obviously we didn't even hit it here. So he's showing something that we never even hit. So it's like a really bearish number. Hitting this though, maybe. Maybe. I should pull these out probably more and do these myself. The monthly averages. This would be right here. The 10th percentile, right there where my mouse is. 70K in July 2026. Oh, you guys can barely see that, sorry. That's not good. So right here. In other words, I think his box is aggressively down. And again, he's doing these bars and all this other stuff. But, you know, we didn't hit anything here on the green line, nor here. So I'm not sure why the green line is used as guidance for the bottom of his. Blue line I could understand, but not the green. But the point is, yeah, next summer, 70K. I think that's a more reasonable. I'm not saying I want it to happen, but so I thought that was a decent decent look at the old technicals. It's going to be up to a lot of things. Up to these guys, up to Sailor. But I would still take a lot of confidence in this. All right, even if we look at just the extremes. Okay. Yeah, it's still 80,000 by a year from now. It actually makes more sense to me that we'd have a deeper bear or a deeper, say, drawdown sooner rather than later, since we didn't have the explosive top relative to the power curve. This is why you guys are in the 99th percentile of Bitcoiners. If you're watching this channel and thinking about what the power curve actually means. So we just didn't have the explosion in, in activity that we've had in prior years. And you can see that here. All right. Back in 2021, miners hit $17 billion in revenue, which was a major high from the last cycle. Now we're barely creeping up above that level. And when I say that, I'm not thinking that it's not going to go down. I'm thinking it's just going to take longer to go up to the next level. It's going to get wilder. I didn't prepare much of a geopolitical rant today, so I'm not going to go through it. Ukraine's getting pushed hard to agree to give up their lands, which are red lines, but I think they're going to try, as they always have been doing, to offer some sort of a ceasefire. I think Russia's going to reject it. And when that rejection comes, unfortunately, it's going to be more volatility. Anybody else want to see any other charts? If you look at this itself might be an interesting driver of price. A little bit different than the money supply. All right, much more reactive, much more responsive. But even if we go down to 50K and hit that 0 percentile, right? It's not going to break this curve. It'll be cheaper Bitcoin for people, but this curve has been lower than we've been right now. And we'll just have to see what's going to have to happen if we set a new low, right? Is you'd have to track wherever this number would be at some date in the future. Okay, because December 12th, 2025 is going to be passed, so this 115,000 is not a interesting hurdle anymore. But at some day in the future, if we fall below that relative level of whatever is projected for now or the near future, then we'll see that we've sort of broken new lows in the power trend, but we haven't hit it yet. Haven't done it yet. These no, but I'm getting there with more stuff. It's going to take me a little bit of time because I'm reformulating my back end. But I'll try to get more up there for you guys. There is, Kurt. I don't have any at the moment. I can pull up... I can pull up one. Not according to the power curve, but we can just see what's happening to short-term HODLers. But I think I need to update this as usual. Show you guys why it still takes some time. Oh, I don't have them all on my site. This query. One second. Sorry. This one is probably not good to do on the fly, but I'll try it. Sorry for the dead time, guys. Give me just 1 second. Yes, it does. But their growth is very fast. Much faster than governments buying gold. Although, of course, the big question is when governments buy Bitcoin. We haven't seen that yet. I should probably do an oscillator of this as well, because this one is actually much better than I thought. It's not bad. I don't want to say that the ETFs are going to move everything about price in the near future, but it certainly is. It's pretty good. Just give me 1 second. I'm actually trying to run a query and it's taking forever. Good morning, Gio. While I put it together, back to this still seems like really, really deep discount. And if governments aren't buying that much gold, at some point they might want to swap some of that gold into Bitcoin. I'll try to get you one more on this HODL supply because my back end changed and now can't find it. You wonder if you even just take it on IBIT, how it might affect the price. Probably not as good as the total. One more for people that just joined, but I do think this is interesting with the MACD rolling over. and I need to make this chart myself, but the green line is too deep. And this didn't hit it on a wick, so I don't think the 100-month moving average tells us much. 50 months is better. But if you line this up to the power curve and say it does dip, then you're looking somewhere here at the bottom rank of the power curve. So whenever that hits here, could be a year from now, 70,000. This is a year from now. That would throw a lot of people off, wouldn't it? If we really do have the cycle still and we go down. Give me a second. Just 1 second. Sorry, guys. A lot of dead time today. But I want to get this HODL map up just so you can see this one. It's not based on institutional, but it will still show you because we are moving from long-term to short-term UTXOs at the moment, which could signify a little bit of a boom. What do you guys think about this one? I promise you I'll get the HODL supply. If this was really the end of a secular bull that we had for like 2 years, basically, started a bit early. And we go down and we even hit like the 0th percentile, we would probably hit the negative or the worst level that we ever hit on the painting the power curve lines. which, as I said at the top of the video, was May 2017. But we have a lot of room still to do that, right? Because we have $8,000 worth of clearance on the power curve, and the power curve goes up $100 a day. So all right, let me see something. I think I'll be able to give this to you guys in a second. Let's pull this up. If I found it in my code or not. All right, finally got it. Still not updated till today, though. What's going on here? One second. Almost there. Almost there. Almost there after all this dead time. This is again why I don't have all the charts online, but I'll get there. All right, older UTXOs, all up here. All right, longer than 10 years, shorter here. Take away the long ones, this is all a percent of the total. Take away more than a year, you can see this. Let's put this log right on the price. Sorry. Let's take the price log right. Let's take down more than a year. And probably even 6 months. All right. This is percentage of UTXOs that are 6 months or less. And when we have booms, they do, it's really the midterm HODLers that sell, that come down. These guys go down, and short term goes up. So UTXOs move from the HODLers to the new HODLers, or people that are buying at, say, too high a price. And it's interesting. We're going up again. All right. During our ETF bull, we went up here, and we are going up again. So this is a slightly bullish one, I would say. It's hard to read this market in the short term. Longer term, I'm not too worried as usual, but I think that's less helpful. It's more this. Even if you want to just look at monthly. Yeah, let's look at 3 months. No, 6 is better. It's possible, some people have talked about is, these are old hodlers that have moved their coins into new vehicles, or, they're, if if you're tired of holding coins in, 10-year-old wallet technology and you're getting older and don't want to think about it, and you live in the US, some people are, some old hodlers are literally transferring their coins into these, treasury companies. Some people have done that. So it's possible it's not new demand. But on the whole, when you get these bumps in the short term UTXOs, you do get booms. So this was, I would say, is actually my most bullish chart on the cycles not being over. As we go through that bear, they go down until they find a bottom. Down. Down. So we're not having, typical bearish, sell in May, come back after 2 years, Bitcoin behavior there. There is more activity. The question is if it's new, genuine demand, or perhaps, some of these old holders that are swapping into iBitcoins or whatever. Question: how can Bitcoin price be defined by a power law when the denominator is arbitrarily created? If the money supply doubled tomorrow, break the power law in fiat. Well, that hasn't actually happened for other currencies. So in the weaker currencies, we looked at this a while back. This is another one I need to update on my back end, so it's not going to show up most recent data. But even in the weak currencies, you still have a power law. When did this stop? Well, maybe that is updating. So here's the Turkish lira. It's been inflating at 40% a year for a long time. I've tracked this a lot. And it's power law. Unlike the dollar, we're at the top ends, but even as more currency units are created in that artificial construct that is the Turkish lira, it still follows, right? Still pushes. It's just at a faster slope than the dollar-based power law. So don't get me wrong, like I'm not defending the current system or whatever, but I'm just trying to give you guys a realistic expectation of where this stuff could go. Like hyper Bitcoinization seems very low probability based on how things work in the real world, how they work with governments that control this stuff. They're going to do everything they can to keep control. I mean, uh, gold would be a good example, I think, of your question here. So gold has been weaker, and now it's stronger. So we see here gold is doing the opposite. All right, similar to the dollar. Dollar's kind of in the middle, right? It's not far below. But gold is outperforming Bitcoin. So gold is, relatively speaking, in the last 2 years, it's about the same actually. Bitcoin's still a little bit better. In the last 3 years, Bitcoin's definitely better because Bitcoin in 2022 was 10 ounces. Now it's 20. But still, this relative price of gold ounces per Bitcoin has never been this cheap statistically. So it's stretching the power law on this side, but and this brings me back to this point is, is what I keep harping about is we can take comfort in the fact that this is not even the worst it's ever been. If you want to consider, this period's been bad, this period's been bad, like the worst it's ever been was actually coming off of this crypto winter. So until we get to the point where, right, and we have to follow this. I have to keep updating you guys on this, but back in May 2017, the power curve projected 115. Now it's true that Bitcoin's price right now is lower than that. Okay, that's true. But the curve itself is higher. Right now, the curve itself is 122. All right, so even with all this sort of bearishness or not as exciting bullishness that we've had in these months, the power curve hasn't like been strained in dollar terms. But it can get strained in, say, stronger currencies, which gold is right now, kind of stronger, better. And it can get pushed or, strained in weaker. Well, here's gold in dollar terms, by the way, which is a weaker currency. But percentile wise, it's still, we're still looking just fine. Probably, Kurt. I'm not sure. I mean, if we just remove this, it's not much activity. Well, this is longer, not larger, so. No, I need to do it on larger holders. That's true. I have the data. I just haven't gone through it. Obviously, anybody that's in this bucket is de facto a large holder because they're, however more coins they have, they probably have a decent amount of them that were, cost a lot less than today. But I don't have an answer for you just yet. But I stand by what I said earlier. I mean, this is still something I'm paying attention to is this little bump. It's not bad. Could this have been the bottom? Maybe. It's a hard market. It's a hard market to read right now. It really is. Like this was obviously just a clean, beautiful top. Bitcoin always throws us for a loop, right? I didn't expect the double top here. It was a double top here. That was mostly just observing at this point. And then we've had this interesting sort of 3 peak cycle since the ETFs have been around. I think what I need to do is give better analytics on the ETFs now. Like, Where's my flows? This one is very interesting. All right, like this is pretty indicative, much more than the money supply. Flows come in, prices going up. Flows go out, except for here, and it did go down a little bit, but flows go out, price goes down. I would not expect the power law to break at all for a long time. And this is also a good point because, you know, again, I cut my teeth in the global financial crisis. You do have these major, what's the word? I mean, black swan is a word, but there's a more mathematical term for it. It's really a power thing. I mean, it's an 80-20 thing, right? Like when a black swan happens, yeah, we don't even know what Bitcoin's going to do in a black swan. It could go down briefly, like gold did during the GFC, then go up. All right, so here's the storm of the crisis was right here. Gold was $940 in the spring and summer. Bear Stearns problem was already a year before. But then when Lehman, everything hit, gold went down, and then it went up. So I don't think there's a fast rule, even what happens to Bitcoin there. But regarding the general idea of like the dollar hyperinflating overnight, I actually think that is a pretty low probability in and of itself. Again, not defending our overlords at the Federal Reserve. I just think it's a lower probability. And regardless how the power curve looks, if things like get stretched, either Bitcoin doing well against the currency, which is you have here, Bitcoin is always giving you more Turkish lira in response if you hold Bitcoin, or Bitcoin doing worse than another currency, like it's doing against gold at the moment. It's doing worse. All that's going to happen statistically for a while is you're going to get these weird stretched zones, right? So you see the zero, but the difference between the 0 and the 1, you probably can't even read, but these are 1, 2, 3, 4, right, for the percentiles, 10th, 20th, 30th. Look at the 10th, 20th, 30th, 40th, 50th, 60th. They're all bunched up together because that's where most of the action has been. But in this, you know, very interesting period where gold is outperforming, we have this huge gap between the 0th and the 10th. That's all that's going to happen. You're just going to get these bigger gaps. But as far as like it completely breaking open and turning into exponential or whatever, I don't see that in the shorter medium term. I do think it's possible Bitcoin could go exponential in the longer term, but that's not a good scenario. It's probably more debt that's going to be behind Bitcoin at that point. Not a good scenario. Good morning, Scotty. That's a good view. Be calm, carry on, buy more. Yeah, I can get all of it. I think, Kurt, there's a lot of good data out there. Big wallets, big UTXO moves. We could look at all that. But I don't have it ready at the moment. This is the supreme comfort chart. It really is. The fact that this is a flat line, nearly a flat line. It's incredible predictive power. And still not at the lowest level it's ever been. The lowest would have been if the curve was, like I said, 115.47. So, just have to keep tracking. See how right here we have this, you can barely see it, but the dotted line is below the solid line, right? That usually doesn't happen. Usually we boom above it. So we usually, well, we're coming down from these levels, which we're just never going to see again. These were like very fast power curves. But we've still always pulled it up a little bit. But admittedly, we're pretty smooth here now, and even every time we're below, we're going to pull this a little bit low relative to the cumulative prior past. The only time that was really that bad was, you can barely see it, but this dotted line is below the solid line. So, but anyway, that's a negative scenario. That's what APSK was joking. He's like, you didn't tell me our models were going to break to the downside. And I still don't see that happening. I mean, I don't think the price is going down. I don't think it's going, like, it could go down to 70K or whatever by next year, and pull the power curve down, but I don't see the model breaking to the downside. If it breaks, it's going to break to the upside, like you're saying. And we're nowhere near that. Breaking to the upside would be, it'd look more like this. And then it might just, turn exponential. But that's a long way away from where we are. Right? The closer this dotted line is to the solid line, the better the power curve fit relative to our history, relative to what we know about how Bitcoin grows. So, looks good. Again, I don't want to repeat myself too much. It calls into, it's stretching it on the downside, but it's not, unless you think gold's going to 20,000, 40,000, and Bitcoin's going to stay the same, then we might have a new relationship of Bitcoin to gold. But again, I don't see the demand drivers for that. Central banks are not buying as much gold as ETFs are buying Bitcoin, right? This is way stronger demand curve or increase in holdings than central banks are buying for gold. So it's just, this is the inverse of what I was trying to show here with the Turkey example. Can't find everything. So Turkey is outstretched to the top. But again, look at the percentile bands. They look fine. Yeah, we're in high levels, but we're not, we're not. If the thing starts to break, you're going to see these percentiles like get bigger and bigger and bigger. It is true this is happening for gold, but it's, it's way too early to call that. And I don't see gold remonetizing itself and not Bitcoin doing something. So it's got its moment in the sun for sure. But if we want to consider the dollar as the main world reserve currency, and it is, then focus on this chart. And as long as those lines are close together, it's a pretty good fit. If anything, we usually break it to the upside every cycle. We haven't done that now. It's true. Let me know if you guys have any more. It's a good suggestion, Kurt, on the holder dynamics. I need to show more of that. But for bullish, you want to stick with the bullish case. Volatility is low. All right, even with these big drops, it's still low on a rolling year window, daily volatility. Bullish. When you get little bumps here, it's bullish, typically. And the fact that miners are not even making like an order of magnitude more than they were making in 2021 on a trailing 12-month basis, to me, is also bullish. This is bearish. I need to do this chart as well, but again, too bearish is the green line, but this line, if we hit the 0 percentile a year from now, it's about there. 70,000. Well, let's look at it again. If we hit the 0th percentile a year from now, 80,000. This is why I say again, if you don't need the cash like immediately, I wouldn't worry too much about these situations. I do not. I do not have that ready. It's good. It's a good point, though. I could put it together. I'll try to get that next week. This is, I think, a good chart for the bottom for Bitcoin. I mean, like, how much cheaper are we going to give it to the gold bugs? And it's scraping. From November now. It's all early days, super short-term stuff, but it's not going any lower than these levels. And I think it was, what, a quarter ounce a day? Yeah. No. Not a quarter ounce a day. 1/10 of an ounce a day. The power curve is going up 1/10 of an ounce a day. Bitcoin per gold. All right. A little bit less than 1/10 of an ounce. And I just have a hard time believing that we're going to give it much cheaper for the gold bugs, for Peter Schiff. Sorry. I'll finish up here in a second, but statistically, yeah, nominally in recent past, we can say that 10 ounces of gold was a screaming deal for them right here. 9 ounces. But statistically, they haven't seen these prices ever since the Slashdot article, which is wild. So this is, to me, my most interesting chart at the moment. We'll have to see, guys. All right, I think I'm going to call it there for today. Let me know any other charts you guys want to see. If you want any merch, hit me up. Eventually get that on the website, and also get more charts on the website as well, eventually. Thank you guys for watching. Hope everybody has a great weekend.